What's going on, guys? In this video we're going to cover market behavior using price action tools that we have in our disposal. When we are trading, your goal as a trader is to always find some sort of pattern, because you never want to leave these candles on the chart without your trend line, without a key level. You're always looking for possible key entry points that would generate high probability setups. So what I'm going to do, I'm going to start with drawing my short-term trend line in this bullish move. I'm drawing it for a reason. I'm drawing it because I want to follow the trend line rule. After there is a break of this trend line, traders will attempt to create a new extreme. It happened. From that point on, you can expect correction or straight up reversal. You guys can see market push strongly below this 21 bar exponential moving average, indicating strong bearish momentum, and reversal pattern occur on this bar right here. Reversal pattern is a two failed attempts in the previous trend's direction. Previous trend was bullish that played out with the break in new extreme. Buyers are no longer in control. First attempt to go long, second attempt to go long, all too late. Buyers are no longer in control. What I'm going to do, I'm going to draw my trend line because I never want to leave these candles naked. I always want to have some sort of pattern that would indicate what the market is doing. Now the market is pushing lower, and you guys can see there was an overshoot for this downtrend. Overshoot a lot of times generate break or trend line or straight up reversal. This is unnatural activity. Price was falling like a knife, 90-degree move, and these steep moves are going to be pulled back and bought very quickly. Take a look how far away you are from EMA. EMA acts as a magnet. The bigger the gap, the sooner you can expect correction back to the EMA. I'm drawing these trend lines for the bigger trend, but remember, my goal is to never leave these candles without any trend lines. So I'm going to draw the trend line even for the shorter term ones. There's a break, there's a new extreme, and a bigger pattern takes precedence. So what I know that after breaking new extreme, this uptrend played out, I can resume to be looking for shorts because big bearish bar closed back below EMA. All right, so this is how we are trying to figure out the context. You guys can see price pushed lower, gave us a second entry short, which is a high probability setup. Two-legged pullback at the proper key entry point is going to be a high probability setup. You combine a second entry because that's how human psychology reacts. After we fail to do something once, we will try to do it again. And if you combine with the key entry point, you will get a high probability setup. And there is new low, micro double top, bottom resets the count. So there's a first attempt to sell, little pullback higher, second attempt to sell at the key entry point, and market push lower. Now when we're looking at the structure, you have a new low and you have a first entry short, little pullback higher, a second entry short. You may be thinking, great, same pattern as was right here. But no, because you are not a pattern trader, you take the entire context into consideration. And what you can see, there's a bottoming pattern. Bottoming pattern is characterized by lows being static while the highs are being lower and lower than the previous one. This is a bottoming pattern. So what I'm going to do, I'm going to draw my key level, and this now represents a strong level in the market. And I know if we trigger below this bar, I'm not going to short, I'm not going to get suckered into this trade after all this move happened. This is what losing traders do. They enter at the very low of the entire move into strong key level, and market is confirming strong bullish momentum and pushing higher. I never want to leave these candles without any sort of trend line, so I'm going to draw my trend line, and I have a break and a new extreme form. So according to price action rules, the uptrend played out. But take a look what happened. We are coming from the bottoming pattern. So I'm not going to sell the market yet. Even though the uptrend played out, this is now a strong support key level coming from the bottoming pattern. So I'm going to be patient. If anything, I'm going to look if there is a resumption of an uptrend. We can even go higher or start going sideways, but I don't want to keep selling just yet because we already have a break, move to a new extreme. This is a double bottom, and double bottom is sometimes close enough. All right, so I'm watching the chart and I have a strong bullish move up, and it's just a first entry. This is not a high probability setup. This is just a first entry long, and market kept higher, kept higher. Take a look what happens. You have a break, a new extreme. So that means this is not proportional to this. So I'm going to draw my trend line something like this, and I'm watching the chart. I'm just watching the chart. You're far away from key entry point, so I don't want to go long. At the same time, I don't want to pick a top, and I can see we keep moving higher, we keep moving higher. I'm going to measure the leg like this. So this looks like a two-legged move up that played out. And now when we turn down here, I drew this trend line something like this, and I put it at the bottom. You guys can see it fits nicely at the bottom, and I drew this solely based on kind of like an experience based feeling, because a lot of times in the market after such a strong sell-off and consolidating structure, if you buy back 30 or 40% of the previous move, there is a possibility for the bigger pattern to be in play. All right, so when I'm watching this, I don't know that this pattern is in play. I need a confirmation. Price pushes higher, gives me a lower high, but I cannot just enter yet because still this was just a confirmation. I want to be really sure. I want to wait for the higher probability setups. And as I mentioned, second entry is a higher probability setup. Second entry long directly into this trend line is going to be a trap. So what I'm looking at is a second entry long forming, but I don't want to go long after this upturn already played out with the break and new extreme. And there is first entry long, pullback, second entry long, failure, confirming this trend line. This is high probability setups. This was the first trade that I took, and the market pushed strongly below the EMA, confirming the bearish downtrend. All right, so what I'm going to do, I'm going to draw my trend line because I never want to leave these candles without any sort of pattern. And so we're analyzing the structure. What is the structure? A little bit of a bearish bias and almost also a little bit of a trading range, because we're right now going a little bit sideways, but right now we're below EMA, so this is what you're focusing on. This is now a downtrend, and you have a new extreme, first entry long, pullback, second entry long, failure, break of this downtrend. So you expect, according to rules, to create a new extreme. You close below EMA, high probability setup. You're following the context, you have a break and a new extreme, and the market reversed strongly. Right, before I talk about the next setup, I want to talk about why I was looking for this pattern, because some of you may be confused. I'm going to show you the similar patterns that happened. All right, here is a similar pattern. We have a strong sell-off with the break, new extreme, sort of like a bottoming pattern. Lows are static, little bit of bullish move, correction. We bought 30% back of this initial sell-off. That is a kind of setup for this trend line, lower high, first entry long, pullback, second entry long, failure, and market is working lower. Okay, hopefully you guys can see what I mean. Maybe it's only my subjectivity, but I'm trying to show you guys how the price action reacts. And here we have a similar pattern as well. Strong sell-off, break, new extreme, little bit of a bullish move. We bought back like 30%. There's a new high, first entry long, pullback, second entry long, confirming the trend line, and market keeps pushing lower and keeps pushing lower. All right, so this is what I was looking at this point on. Strong sell-off, break, new extreme, little bit of a bullish move, and I was expecting for this downtrend to happen. Like I said, maybe my subjectivity. Let me know in the comment section if you guys can see it too. With the experience, you will recognize that the price action repeats over and over. But take a look what happened. You bounce off the middle because you would be expecting for price to make it all the way down here to this strong key level. And since you have a strong bullish move up above the EMA, indicating strong bullish momentum, there's something off here. This downtrend may not be valid as you initially thought. And what you now have is 4 or 5 bars going sideways, a lot of dojis, a lot of stims. EMA is flat, bullish bar, you don't want to go long. Big bearish bar, you don't want to go short either. You have a 7 bars going sideways. EMA is exactly in the middle of those bars. This is what it's called congestion. And you never want to trade these congestions because most breakouts of congestions will fail. Take a look, little breakout, and market is pushing higher. And when you're watching this, your goal is to keep identifying the structure. And market is now indicating strong bullish momentum, is not indicating the bearish downtrend being valid. So what I'm going to do, I'm going to delete this and I'm going to look for other trend line, because you never want to keep your candlesticks without a pattern. And you're making high lows, strong push above the EMA. So you're now looking at the bullish structure. So you're looking at second entry longs with the trend or felt second entry shorts. So I have a new high, first entry long at the EMA, but it's just the first entry, it's not high probability setup. And I have a pullback, second entry long. Big bullish bar coming off key entry point. This is the EMA in a bullish trend. So the context is good, behavior is good. This is a high probability setup. Nothing complicated. You don't need nothing complicated. Simple price action. You guys can see fell second entry long, fell second entry long, second entry long. These were against the trend. This is with the trend. That's all you need. These are the high probability setups. That's how the human psychology acts. There is also a little bit of a resistance. So your stop loss goes 1 tick below this bar, and you want to make sure you have enough room to scalp to here. If you don't have enough room for a tick scalp, sneak in a little bit back with the limit order so you are sure you can clock in your target profit. All right, market pushed strongly higher and they got back and came back for your profit. So this was my second trade for the day. I took this trade and this trade right here. Now as the market, market is strongly pushing below EMA, so once again indicating strong bearish momentum, I'm going to draw my trend line. We may get a bounce of this bigger pattern, so let's see what's going to happen. We have a big bullish bar. If we get triggered above this, this is just a first entry long, and the downtrend is still in place. Sellers are still in control, so I cannot go long yet, but luckily there is no entry. We just have a downtrend working lower. We don't have a new low, so in this instance we have a confusing situation. We have a new low, first entry short failed, and a second entry short trigger right here. In this situation it was really confusing what to do, because if you take a look at the price action structure point of view, we have a downtrend, so you expect to create new extreme, and this channel wasn't confirmed. Okay, so you're expecting for price to create new extreme, but at the same time we are moving higher, we keep making higher highs, higher lows, so there is a chance we will push back above the EMA, back above the trend line, and continue working higher on our way to create a new extreme. So when you're unsure and you have two conflicting patterns like this, you cannot take an entry and you have to sit on your hands. You guys can see bunch of indecisions, 1 2 3 4 5 6 7 8 bars going sideways, consolidation, no entry here, 9 bars going sideways, 10 11 12 13 14. You guys can see you're clearly going sideways. This is exactly what was happening here. People deciding whether they're going to push the market lower or whether they're going to push above the EMA and continue higher. This is exactly what you're thinking at that point, so you're not taking an entry. You're not the gambler, you don't want to force a trade, you wait for high probability setups come to you. Take a look how clean these trades were compared to taking a trade in this mess. Okay, take a look, more congestion, and you created push back to new extreme. So we have a break, new extreme, and this is starting to look like a consolidating structure. Okay, so what I'm going to do, I'm going to draw my support and resistance, because it's all about identifying the structure. EMA is now completely flat. We move down, up, down. So we are expecting from this point on to go back up. When I was watching this, I was honestly expecting for price to go all the way down to this low right here, all the way to the major key level at the bottom. Why? Because the uptrend failed and we broke lower, so I was expecting for bears to take control and move it all the way down to here. It didn't happen. Market pushed higher, and there's actually a nice bullish long which I'm going to mark. I'm actually going to mark both of these setups, because if you're following the rules and this is a trading range, you have a break and a new extreme and you have a big bullish bar, you may want to take a calculated risk, because the way you trade ranges, you buy low and you sell high and you fade the breakouts. Okay, and now you're at the bottom of the trading range with the big bullish bar, so you may take a chance here. You would have gotten stopped out, and now this is a higher low situation, sort of. You can treat it this way. You can treat it as a new high right here, first entry long, second entry long, and you may want to take an entry right here, because you know a lot of people are going to get trapped going short far away from EMA directly into this bottom of a trading range. This is what you're playing here. Okay, you're gambling that the traders are going to get trapped far away from EMA in the bottom of the trading range. The market keeps pushing higher. You have a higher low, but you close below EMA, bearish body. If you close above the EMA with the bullish body, this would be a great higher low confirmation. What is a higher low? Basically a confirmation of the strong bullish momentum when you come from the trading range. Market keeps pushing higher, so this market is pushing higher. I'm expecting a failed second entry short, and you never get it. Market just keep working higher. So what I'm going to do, I'm going to draw my shortened trend lines, because market is now indicating strong bullish move up. This is a trading range. I'm getting very close to these highs, so I'm not going to go long directly into this. But take a look what happened. Maybe the uptrend is going to get a new extreme. There's a double bottom here, and we are pushing strong above the EMA. So overall pattern is still up. Overall move is still up. We keep pushing higher. So I have a new high, first entry long, pullback, second entry long, downtrend played out with a break and new low, two-legged move at the key entry point, same pattern right here. This is a high probability setup, and you have to take it. Stop loss go one tick below the signal bar. You put your limit order at the close, and you get exactly 9 ticks. Quick, easy scalp. And market instantly reversed, and I already have this trade marked, because even though we made a quick scalp here, you can actually treat it as a failed second entry long when you're very close to this resistance. And this is you ticked higher, instantly reversed, big bearish bar close below EMA. You're probably not going to reverse gear so quickly when you're watching this live, but I didn't take this trade. And when I saw this, I attempted to put the limit order and market took off without me. Okay, so once you're coming from the high side of the trading range, you're expecting for price to go all the way down here. This is what you're expecting, but you stopped in the middle, pushed back above the EMA. You got a bunch of bars with the stims going sideways, more bars going sideways. EMA is in the middle of those flat, EMA is in the middle of those bars. Same thing happening right here is happening right here. And take a look what's happening. Higher, higher low, higher low, higher low, meaning each lows are higher, something like this. Okay, this is what it's called a bullish imbalance. You guys can see normal trading range, you go from highs to the lows and vice versa. Here you go from highs and you cannot make it to the lows. All right, this is a bullish imbalance. This indicates that the breakout to the upside is most likely going to work and you don't want to fade it. All right, so you have a bearish bar right here. I'm not interested in fading this. All right, so when I'm watching this, I'm just looking for second entry long now. Uptrend is resuming. I'm looking for second entry long. I have a new extreme form for this overall uptrend. So I'm looking just at the structure. I have a new high, first entry long, pullback, second entry long, but you're going wrong directly into the highs. You want to have room to previous highs like here on this second entry, room to the previous highs like this. You cannot go long right here. Okay, and hopefully you understand what the structure is right now. Very bullish structure. And at this point on, I don't want to go short because price is above the EMA. We're pointing higher. We are in this channel and there's an overall bullish bias. But at the same time, I don't want to go long yet because because it looks like we may have a new extreme of this uptrend. So I'm just looking for some short trap more or less. But we are still going sideways here. We have a new high, first entry long at 2 key entry points. Also, we can treat it as a little fell breakout below the congestion, but the signal bar is so bad. It is just the first entry. I don't know. Even if it's of 2 key entry points, maybe an aggressive entry because you can sneak in with the limit order and risk very few ticks because your stop loss go below here. It's an inside bar, so you're always risking less. But you guys can see market keeps pushing higher, keeps pushing higher, keeps pushing higher. So this trade was a little bit aggressive, but at this point, once you keep making new highs and new highs, you have to understand that this is probably a bigger pattern. Overall, this is looking quite rangy, but there may be a pattern, something like this, which I wasn't really a fan of watching this live because this feels quite flat, but this is the structure we get. So you have to trade the market you get, all right? And this acts as a trading range, just slanted. Trend lines are just support and resistance lines, but slanted. Okay, so as the structure is up, I'm looking for second entry long. You have a new high, first entry long only. Oops. And I have a confirmation of upper trend line and we have a strong sell-off. When you're coming off the upper trend line, you're most likely going to get to the opposite. Not always, but that's what you have to keep in mind. I'm going to draw my short-term trend line once again because I want to respect and want to see who's in control. The bears are right now in control. I have a first entry long, break, and a new extreme, and a second entry long. But take a look what happened. You closed below EMA. This is a good indication something not okay, and you're coming off the other side of the trend line. So you're going long right after a very short correction and you close below EMA. We are not pattern traders. You have to take the entire context into consideration. This is the trade you want to skip because you're coming off the upper side of the trend line and you close below EMA. Okay, you would market push higher, turn down, micro double top, micro double bottom, but you close once again below EMA. Had you close above the EMA, this would be a high low setup. This would be great entry to go long. And look, we may get a high low setup. You tick lower, reverse. If we trigger above this bar right here, above the EMA, I'm going to go higher because we may get a strong enough bullish momentum in the market, but it never happened and market keeps pushing lower and keeps pushing lower. Okay, so hopefully you understand that we are not pattern traders. This second entry long right here, why is this second entry long different from this one or this one? It's simple. Here you have enough room to other trend lines, upper trend lines. Same thing right here. You have room to resistance to other trend lines. Right here, you already the entire day we've been working to this point right here to touch the upper trend line or just make a significant move up. There's a time for correction and the trend is going to end at some point on. And once again, you have a short leg break, new low, new low, new low, and this is not proportionate enough to this tiny little leg. So what I'm going to do, I'm going to draw the trend line from the new swing. Okay, this is what you have to do. This is how you draw your trend lines. You cannot basically focus on this as a break, new low, new low, new low. No, once this leg is bigger and bigger, you have to start and drawing your new trend line. All right, so once the market broke too far down below this trend line, I have to switch the gears, because there is a chance we're going to get a break, move to a new extreme, just like we did here on the prior trend line. But you need to see a bullish momentum right after the break. You cannot go so far down below this trend line. This right now feels like we may not even retest the high. All right, so I'm looking for second entry shorts. I have a new high, new low, first entry short. I have a, and we're pushing higher, and we're pushing above the EMA. Okay, so, and once again, this move is a little bit bigger than this. So I'm going to draw my shortened trend line, something like this again. Okay, and we may actually get a new extreme. Okay, that's interesting. We are above the EMA. We have a bullish momentum. So let me see. Oh, and we actually have a break and a new extreme. So let me see, what do we get? We are far away from EMA, so I cannot go long. Maybe if EMA holds and gives me a second entry long now, this indicates that we may actually get a new extreme of this, uptrend. So let's see what's going to happen. And we have a strong push below EMA. All right, indicating bearish momentum. So it's completely okay to be looking for a new extreme if the EMA holds. It's not holding. It completely sliced through. Downtrend is beginning. This downtrend now. This move right here confirmed that this downtrend is valid, and I'm looking for a new extreme of this downtrend. Take a look how strong this move was. So I have a new low. I have a first entry short. This looks like a tool, like a pullback, but it's not technically a second entry. But I have a break and a new extreme, so I know that the buyers are no longer in control. You're pushing back below EMA, and you have a second entry short, new low, first entry short, first entry short, second entry short. Right, this is the high probability setup. At the key entry point below EMA, I'm going to mark this trade and quick, easy scalp. There's a new high, first entry long, pullback, second entry long, below EMA, in a downtrend, looking for a new extreme. Signal bar is bad, following bar is bad. If this bar was a little bit better, this would be a great entry, but no entry right here. I'm expecting a new extreme. I have a first entry short, pullback, and a second entry short, but I cannot go short below this big bullish bar. I'm going to draw my trend line. I have a break, new extreme, and I have a big bearish bar to close below EMA. Okay, and I can treat it as a second entry short, even though it's technically a third entry short, but it is on a bigger picture, like two legs up. Same thing, similar up here. All right, so I'm going to mark this trade because this is big bullish bar. You close below EMA with the break and new extreme, so the uptrend played out, and you move to the downside. You have a new low, first entry short. Maybe you're going to get second entry. No second entry. Market just pushed lower, and I'm going to draw my shortened trend line. I have a break, new extreme, but I closed above the EMA. Okay, something is different here. Each time right here, you closed below EMA, and now you closed above the EMA. I'm not going to take the second entry short, and look what can happen. You may get out of this barely, but this is already indication. Each times down here, you're closing below this trend line, below this EMA. This is important bullish this is important bearish indication. When you close above the EMA, you have to be real careful. Plus, you already made a double bottom right here, which sometimes is close enough. It's the same thing right here. Okay, break, double bottom right here, break, double bottom right here. So this is another indication. It's actually a triple bottom, first bottom, double, triple. So this is indication that we may go to the other side, but it's already too late anyway. So hopefully you guys understand that all you need is simple, high probability setup. Failed second entry long, failed second entry long, second entry long, second entry long, and a failed second entry long. This is even a second entry long as well. Little bit of failed breakout lower, second entry short, second entry short. Everything is off key entry points. Everything is with direction of a trend. That's where all the magic happens. And look what you get. I keep mentioning that the high probability setups they take time to develop. Once you take a one high probability setup, you can almost count on waiting here for 20 or 30 minutes for another to happen. It takes time for the high probability setup to appear. So if you find yourself constantly looking for setups, this is the first sign that you may be over trading. You're forcing trades because you may be waiting here from this second entry to all the way up to this second entry short. All right, but that's what you have to do is you want to be a successful trader. Every professional trader has mastered the ability of being patient. If you are unsure, you have to be patient, and you know that just high probability setups are rare and you cannot force trades, because what's going to happen, you're going to take the second entry long below EMA and you're going to kick yourself afterwards why you force the trade when you have a bunch of second entry longs above the EMA and then you have second entry shorts below EMA. All right, so I'm going to wrap it up. Hopefully you found this video useful. Enjoy the weekend, study the charts. I'm going to see you guys on Monday. Take care, buddy.